Welcome to TradeTheNBI.com. This is John. This report is for the 16th. What an exciting Ferragusto. We did exactly what we were expecting. We moved right back up to the algo level at the 55.59. It's slightly better. Where do we close it? Right above it? Yeah, 87-ish. So that was pretty good. Pretty clean. I mean, there just isn't anywhere else to put resources, and we can see that with shorts still in this active NBI white lead here. Well, not lead in the sense that it's continuing to rise, but magenta well above it, and that's just a recipe for short covering, and it works beautifully every time. And that's exactly what happened. From an NQ standpoint, likewise, that cleared all the way to their 61, starting out still at the push a little higher to get equal to where the S&P is. So they're slightly behind. So there's the potential for that to push forward. And again, from a DOC standpoint, also pretty clean. And that shakeout rising almost positive. Now, when it gets positive, that's where it becomes interesting because it's going to have to stay positive. Any dip there, and then we're going to have some fill back. And you can see the NASDAQ, not quite positive extremes on that. If we go back to the S&P, we can look. Also, not positive extremes, but they're really darn close to it. So these were right on the edge. So the potential for them to fill exists, but not unless you have a clean sell signal. So it's just worth noting they're not. It's just one of those things where you can clearly see there was plenty of available liquidity cash to buy, and that would be the Fed quietly pumping lots of money into the situation to stave off any crisis that might occur before the election, financially at least. Treasuries, poor guys, they just keep getting bandied about, and again, it's not a safe haven. It's just a place to lose money at this particular stage. It's been epic how wrong the bond market has been and continues to be. But based on, I mean, of course, you had the economic readings that came out, and this is the standard practice. The new number comes out, and it beats miraculously, but then they revise the previous month lower in order to make that happen. So you raise one, lower one, and you end up virtually the same spot, but it looks good from a headline. So that's what you get. It's not even blatant abuse. Is just ridiculous at this point. It's not even credible to believe any of those readings anymore, just because they've so gotten into the habit of just really making a mockery of it. From an oil standpoint, still elevated above that 75. That's still going to be problematic. We already saw that from an inflation number that came in with rising rents, things like that. It's going to continue. They haven't solved anything. The structural issues are still there. And the euro continuing to take advantage of this. No real justification for that one, but it is an opportunity when they can catch people on the other side of it, make a good move on it. They're still selling the idea that the U.S. is cutting rates. Based on what, we don't know. Just jawboning that's been going on for so long. I don't know why anyone even believes that anymore. It just isn't realistic within where the economics are. But it sounds good, and so you got to go with what is, and that's where the psychology is. So at the end of the day, you really don't have a choice. You're going to be in equities of some kind, or commodities that are going to move, and of course, gold. Pretty close to its highs here. Should be able to breach those. It's just a question of when it's going to happen. The interesting thing has been the real muted performance of the cryptos. Obviously, we know Bitcoin's issues back and forth, and of course, ETH has its regulatory ones going back and forth, and the various supply issues and the gimmicks of the Biden administration moving Bitcoins and things like that. But when that settles out, it's just going to create one massive beta move, and that'll be an interesting one. So time to get your Bitcoin miners and get ready to go with those. From an ETH standpoint, barely holding on. It's still weak, right at that 23%, but it's got the potential for a turnaround at this particular stage. So I would look for those when people least expect it, and particularly when the market has a little bit of soft period where there's growing uncertainty with any of the numbers. But I don't know that you're going to get that because they're going to continue to do. I mean, they realize they can get away with the manipulation on the numbers and that, so they're going to keep doing it. So, 6,000. Not out of the question for the ES, not even remotely out of the question. You can see it's just been buy, 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 buy all the way through for the last several days. Cyan under red, always buy. So nothing else to add. I mean, it's as boring as it gets, but pretty darn clear. We had a brief little fade there. That's where it takes off, but then it gets right back in and does it. And the reason is because this can turn into a negative push. So you got to be able to clear out of it just in case. And that's just prudent because in a normal environment, which don't think that we're in a normal environment, uh, it definitely would settle back to a mean reversion in that particular case. Intraday, here we go. Just for the pre-market, skyrocket, and that was pretty much it. There really wasn't anything left to do. Yeah, you had a little bit of softness, but then you just continue to play right within that same zone all the way into the close, and then they push it up a little bit further. Of course, this is going to create some issues, and of course, options dealers are going to have to deal with that at this particular stage. So it could be an interesting Friday as they have to navigate excess call volume versus puts back and forth, and that we expect, and that's the volatility that is going to continue to be built into the equation, even with the upward bias of the overall market in general as the election. Of course, you have the Democratic convention, so that's probably going to be another excitement as they're convinced that Kamala will win the situation, though she did put out her economic plan, which was basically price controls, and it looked like something out of the early 70s. Insane, but hey, that's where things are at. So you just got to go with it. Again, it doesn't really matter to us. Those are just sideline issues relative to justification of market moves. But at the end of the day, the readings are pretty clear, and all we got to do is stick with them, and that's that. As always, anything relevant, I'll put in the Skype chat. Continue to trade well, and don't be afraid of the volatility. It's all good. Have a good one.